So on the business combinations projects, there's several elements to it, and to a degree we're addressing those in phases. So first and foremost is the definition of a business. The definition of a business affects many areas of current GAAP, and that definition sometimes is applied very broadly. Another part of the project has to do with goodwill, and what we're trying to do is to simplify and reduce some of the complexity around the testing for impairment. And finally, we're going to look at the subsequent accounting for goodwill. We refer to that as day 2, whether there should be an amortization or impairment testing. So on the definition of a business, we published the proposed amendments to the definition back in November. The comment period expires during January, and then we'll review the comments and go from there. On the impairment testing for goodwill, the board has made most of the key decisions. We'll finalize that soon.
In the Leases project, the FASB is trying to increase the transparency and comparability of a company's financing arrangements by recognizing lease assets and lease liabilities on the balance sheet. This project was a convergence initiative with the FASB, where the FASB worked through a number of different models to recognize those lease assets and lease liabilities in the most cost-efficient manner. The board has finalized its redeliberations and is looking to issue a final standard within the first quarter of this year.
On the revenue project, the FASB and the IASB recognized that each of their sets of guidance were in need of improvement, and so the boards decided to work together to improve comparability in organizations' top line, their revenue, from one organization to the next, regardless of the industry that the organization happens to operate in or its geographical location. For a public company, the effective date of the new revenue standard is 2018. But for a private company and for many not-for-profit organizations, the effective date is 2019. All organizations, though, are permitted to adopt the standard early as of 2017. And so one of the activities that the board is performing to closely monitor implementation and to be responsive to stakeholder needs was to form the Transition Resource Group. That group has been effective in quickly informing the board about implementation questions that have arisen, and it's also helped to educate stakeholders broadly about the requirements of the new revenue recognition standard. Over the coming year, you can expect to see a number of other transition group meetings where we'll help to continue that educational mission of the TRG.
In the credit losses project, the FASB is trying to improve upon the reporting of credit losses by incorporating more forward-looking information and expectations of what a company actually expects to collect. The credit crisis was evidence that the current GAAP model measures credit losses too late. The FASB understands that in the lending process, a company thinks about forward-looking information and expectations of collection. Therefore, the board believes those same assumptions should be reflected in the financial reporting process. The board is in the final process of redeliberations and expects to issue a final standard within the first half of this year.